Welcome to the Break Free Real Estate Podcast. Hey everyone, today David and I are going to talk about budgeting tools for new real estate investors. I have a ton that are on my mind. David, do you have any?
Yeah, let me go first because this is in your wheelhouse and you're going to steal all the good stuff. So I'm going to do the very, very basic thing, right? The best budgeting tool in my mind that's just sort of, I mean, it's pretty obvious, but it's having a tool like QuickBooks, right? There's some free versions of, accounting software that are out there that you can use. I personally have always used QuickBooks Online. It's a web-based version of QuickBooks, and it allows me to just track all of the expenses, all of the income, and have as many categories as I need to. And if you're even trying to be super conservative and maintain a minimal budget for software like this, you can even start to set up different categories per property. I think your accountant would probably encourage you to have a separate books for every single one of your rental properties. That being said, QuickBooks is like the very easiest base level tool that I think people can use to manage their rental real estate.
Well, awesome. I have never used QuickBooks. I've thought about it. I did like a free trial once and I just didn't like it. Like, because I have, for managing my properties anyways, I have a spreadsheet for each property, and it's so easy for me to just drop the receipts in a Google folder and then link those receipts directly into the spreadsheet, and my spreadsheet is
Beautiful,
pristine.
I bet.
So
Yeah. Well, I
um
got a question for you about that. If when it comes to tax season, do you have an accountant do your taxes?
yeah.
And so what do you provide to the accountant? Just the spreadsheet? And does he use that? Like, or she
Yeah.
use that? Do you export it out into, how does that work?
So at the end of the year, what I do, so I have all my properties that have their own spreadsheets. So at the end of the property, well, I kind of do it throughout the year, but I have one spreadsheet that has different pages, and the first page is like all of my stuff. I also have a softball business that I give private lessons for. So I have like different things going on. And then I have a page for that for my softball business. And then I have a page for my real estate, being a realtor, and I have all my expenses and everything. But then I also have them all totaled, so it's really easy for them. And then
Mm.
I have a page for my rentals, and essentially I just have like a couple columns for each rental, and then just go through all the expenses that are itemized on your schedule C.
See, yeah.
And I just put the number in those from my spreadsheet. And my spreadsheet is already organized that way. So it's
Mm.
already organized in the categories of the Schedule C. And so all I have to do is put the totals in. And then I still put those in that doc as well on other pages that the accountant doesn't really have to look at. But if I ever got audited or something, to have it all in one place makes it easier. And again, like it links to all the receipts. And I'm sure you can still do that in QuickBooks. It just seemed
Yeah.
more time consuming than how I'm able to do it. Um, and my process works for me.
Yeah.
So
And a lot less expensive because QuickBooks can become expensive. I think you're probably going to be paying like um 35 to $45 for like a fairly basic version of it. So yeah, and you start multiplying that across different properties, all of a sudden that can, be fairly expensive. So yeah, your
yeah, and
version obviously free.
that's the big issues that I didn't do it because I'm so cheap. I was like, I'm not spending $35 a month on this. And then one tool I use that it's an app. I use it on my phone. And I don't have any of my real estate tied to it. It's just more of a personal thing. And I've used it since I was just when I became an adult, I guess, is when I started using it. And it's called Mint.
Mm-hmm.
Um, and it's through Intuit, and they pretty much like I just have the bank accounts connected to it that I want connected to it. So I don't have any of my property bank accounts to it. And I'm just able to see how much I'm spending on stuff and easily create a budget and easily, make sure that I'm saving an adequate amount of money every month. Um, and I pay myself for my rentals and I'll put those in as like my income, and so I can see how I'm doing each month. April wasn't a good month. I hate taxes. Um, but so I use Mint and then I also, have like a money management spreadsheet that I created that I use. And let's see, at the end of the month, every month at the end of the month, I go through all of my expenses. So I have a spreadsheet that is it's a 5-year plan, projects for the next 5 years. And at the end of every month, I put in like how much I spent that month, which shows me on my Mint app. And then I put in my rental income. And then I put in like other expenses or other income that I might have received. And then I have my savings and I go through, and so at the end of every single month, I know exactly how much money I have. I know exactly how much money I saved. I know exactly where I'll be at if nothing changes in 5 years. And so that can really help me budget and project like what my next steps are. And when people just are saving money to save money, then I don't feel like they save as much. If you have a goal, like I have this $2 million property I want to buy. And so I'm trying to save up enough money to buy it, like a 25% down payment. And so that's a goal for me, is to try to save enough money so that I'm able to do that without, um, taking too much equity out of any of my places. And so just having a goal, an amount of money you want to save, and an amount of time, knowing how you can do that, making it realistic, is going to be the best. And then apps, whether you pay for one or you get a free one like Mint, or even most credit card companies and most bank accounts can have their own built in. So really, if you just log on to your bank, it should have some type of budgeting software already in. So like you can even just go as far as using that if you use the same bank account for every transaction.
Yeah. Great tips. You're a master of the spreadsheets. And at some point in time, we're going to offer up your spreadsheets to everybody to download and access and use. So watch for that. We're working on putting some content together that you guys can access that will help you in your real estate investing. And one of those is going to be all the incredible spreadsheets that and planning tools that Jocelyn's put together. One thought, Profit First is a great book. Written by I'm going to butcher his name, Mike Michalowicz. Great book that talks about, I'll summarize it in a sense of, it basically is separating your income into different bank accounts. I'll give just a very simple version. There's value in taking money out of your income, out of your paycheck, and putting it into a deposit account on a monthly basis that requires a 3-day time frame to transfer money back and forth. And what that does is, so many people get caught up in the world of, they put money into a savings account, but they have too easy access to that savings account. And so it ends up acting like a checking account. And they end up tapping into that for living expenses, or luxury expenses, or just the stupid stuff that eats into our savings all the time. One of the great tips, and one thing that we've implemented, is that we take that money and we put it into a third party higher yield account that requires at least 3 business days for that money to be moved. And that forces us to pause and make decisions, a little bit better decisions about whether or not we're going to use that money and tap into that money. So just a little tip there.
Awesome. And I always have my clients do something similar, except not that extreme. But I always suggest that people go open up a savings account separate from your current savings account that doesn't have a checking account or a credit card account tied to it. Go open up a savings account and figure out your budget, figure out the total amount of money you can save, and put 75% of the money that you should be saving every month into that other account automatically, whether it's straight out of your paycheck or as soon as it hits your bank account, transfer that 75% of your total savings to that bank account. And then the 25% can go into, I call it a dip into savings account. So it's the one that you can use for emergencies or vacations or any of that. But the other one is called an off limit savings account. And all of that will be outlined in what we're going to be sharing with you guys as well. That's it for today. For more daily investing tips and real estate secrets, don't forget to visit breakfreerealestate.com and make sure to like, subscribe, and share our podcast. We will see you tomorrow.